Hello and welcome to TA for Traders. I'm Nigel Croft and it's Wednesday the 13th of September. In this short video we'll be looking at the charts on the gold price. Now we last looked at the gold price on the 30th of August, so 2 weeks ago today. What I came to the conclusion then was that it looked good. It had just broken up because of the situation in North Korea. But there was resistance to the upside. Now what we've seen since then is we've had a slight move upwards, but just in the last few days we've seen a consolidation, and this is what I was worried about. The resistance that we're seeing from July last year, which goes up to 1375, is too much for this gold price, and further consolidation should be expected. So here we have the daily, and you can see that on this week we've had a slight consolidation, which was to be expected. You can't see the resistance on this chart because it was from July last year, but just bear with me and we'll get there. Other factors to point out on this chart is that we did have a break of the flag, slight downtrend, which was good. And the momentum was positive. The moving averages have got slightly left behind. We've got the first support at the 20-day 1314 spot 5.2, and really I would expect these moving averages to be allowed to catch up to the gold price. There's a slight concern come through from the RSI. You can see that it actually had a double top on the recent peak. It didn't break into new high ground. That's like a slight non-confirmation, but double top is a double concern really, and we've since broken down. It's still above 50, so it's still indicative of positive momentum, but really one would expect a further drift in that RSI and for it to actually probably go below the 50 level. Likewise, the MACD have now come together and are tracking sideways, so keep an eye on those. Okay, let's look at the resistance, and here we've got the weekly chart. So each candle represents 1 week, and you can see that back in July 2016 we had a double top on the weekly. That was at about 1375, and then we created a downtrend before we had the eventual fall off in November, December. Now that 1375 is critical resistance. There's numerous resistance points up to that level as well, which we're now hitting. So there's no surprise that we are getting a consolidation. How long will it continue? Well, it could continue for a few weeks. Let these moving averages catch up. The 20 is moving up strongly, the 50 is turning, and the 200 is just about moving sideways. They will all turn around, and the 20 will catch up. Let that happen. So we will get probably a flag. It's not going to be a quick fall, or I don't think it's going to be a quick fall, but certainly we'll get a flag formation from here, drifting down below 1320, maybe even to 1310, 1300. Let the moving averages catch up, and then that could then give the impetus for a further break, and then an eventual break of the resistance. But at the moment, just expect a consolidation. The RSI actually on the weekly is looking okay. Obviously it peaked, which on the last week, but it's well above 50, 63.92, and the MACD look okay as well. On the 4-hour picture, here we've moved back below the moving averages, the 20, the yellow, and the blue, the 50. You can see that the yellow is moving down and is a resistance level virtually at spot. So that's pushing the market down. If we could get back above the 50, that would help and give support, but we're below it at the moment. So even though it's slightly positive, we need to get above it, otherwise it is going to roll. On the 200, that's a support level down at 1295 if needed, and is obviously moving up. You can see that we've had negative momentum in the 4-hour chart. We're starting to get a pick up just through the last 24 hours trade, and actually it's gone back above 50, 51.09. Also the MACD have just tracked back up as well, so keep your eye on those. They could be indicative that we may get above that 50-day, but the key resistance to the upside on this 4 hour is at just above 1340, 1341. Maybe not yet, but look at the picture on this 4 hour. You can see a potential head and shoulder creation, so keep your eye on that as well. So a mixed picture coming through from this 4 hour. Okay, let's get to the support and resistance levels on gold. And we've got the first resistance is from the 8th of September, 1357.62, with the next resistance, as I said, from July 16, and I've put the level of 1365 to watch. On the supports, the 20-day comes in at 1314.48, and then below there, as I mentioned in the previous slide, the 200 4-hour is at 1295.24. So that's been TA for traders, having a look at the gold price into resistance. The key takeaways from the video are that this resistance is now causing trouble. We've got a double top on the daily RSI, be aware of that. Overstretched on the weekly, and the 4-hour chart is now below the 20 and the 50-day moving averages, and also there was as I mentioned, a potential head and shoulder being created on that 4-hour chart. Thanks for watching the video. Please remember these are my opinion only and are not meant as an investment recommendation. Please read the disclaimer.